All right, all right. Thank you so much for tuning in. Thankful to each one. Thankful to each one for tuning in. Thankful to each one tuning in right now. This is probably going to be one of the most important videos we make, at least this month, because we're going to be sharing with you something that we haven't shared before, and very, very important for you to just listen intently, listen closely to what's being shared. You may have to read between the lines, but today we're going to be going over how to turn your credit cards into cash flow machines. Now, we advocate responsibility. We advocate responsibility. We advocate that you please do not use the credit cards exclusively for consumption, for consuming, because of course that is a trip for some things that you don't want, right, coming your way. So we just want to make sure that that part is crystal clear. And then we're going to go ahead and continue on. For the person that went ahead and gave me their form, gave it to me earlier this morning. We have it. We're going to be sharing their numbers as well, and we just want you to know where we are coming from as far as the cash flow aspect, as far as the debt elimination aspect of it as well, because we're going to go ahead and put it inside of the Money Max account. We're actually going to be doing that right now. So if you have any questions, go ahead and just share those questions, because I know you have some. How can you say you're going to turn your credit cards into a cash flow machine? We'll show you. We'll show you. I mean, and then this is going to be fresh. It's not going to be something that we've shown to you yesterday or maybe 2 days ago or even last week. Okay, we're going to reset the account. We're resetting it right now. We're not giving you a support demo. We're giving you real demos. Okay, and we're going to go ahead and do it without, so you can see, without all of the other multiple funding methods. But if you have a MasterCard, if you have all these loans and you have lines of credit, we'll be showing you exactly how to pay those off, when and how much. Okay, very important. And that's why we say time and balance, because the when would be referencing what? The time, and then the balance would be referencing the how much exactly. Okay, exactly. So questions, please. Let's turn the credit cards. Let's turn our checking accounts. Let's turn our 401ks, even our IRAs. Let's turn all of these banking tools into cash flowing machines. And it's been right there before you. It's not something that's new, not something that is out of your reach. Please don't believe that. It's not going to be something that's out of your reach. It's well within your reach. It sure is. So let's just go ahead, and I'm going to share my screen here. Are you guys ready to share my screen, or do you have the questions right now? Then I'll wait. I know we have a couple people wanted to get on and see what was going on there. Remember, don't just look at the interest rates. Anybody can look at the interest rates, but we got to do more than look at the interest rates. We got to start looking at time and balance. Exactly. To start looking at time and balance. All right. All right. So let me go ahead. I will share my screen right now. I'll share my screen right now so that you can see what I'm seeing. And where is it? Okay, perfect. So of course this represents anyone, right? It can represent anyone. If you don't have mortgage, if you have mortgages, really up to 10, because you can have 10 mortgages per name as of now, as of right now. And you see how we have multiple lines because there's people with multiple mortgages that are utilizing the Velocity banking system, right? People with multiple loans, people with multiple revolving credit cards, okay, and lines of credit, and HELOCs, and things of that nature. Average household net income, we receive multiple lines of that as well. Monthly expenses, monthly discretionary income, all of it is self-explanatory. This person did an excellent job of just looking and then just filling in the blanks here. Yes, they left some out. That's okay. Okay, we can read and we're just going to go ahead and input it right now. So this is what I'm going to be looking at. If you can just get a reference point here, I'm actually going to be sharing my screen for the Money Max so that you could see where I'm going to be starting from. Okay, John and Rebecca, right? Start out with an average, right? Average, national average, about $5,444 in income, monthly expenses. Listen, it could be more, it could be less on both the income expenses. It doesn't matter. We have a plan. Once we have a plan, we can execute it and get up out of that debt as soon as possible. Okay, so that's where we want to be. Right now, they don't have anything, right? But they're about to have something. Okay. They're going to be having a new account. Okay. Can you guys see that? All right. So they're going to have a new account. And what we want to do is we want to go ahead and we want to share with you this new account. What does it look like? Okay. Let me go ahead and stop right here. I will pin something. What's going on, Chris? Thank you so much. I'll pin something up here for you. That way, you can, if you want to go a little bit further, just let me know. I can get your plan to you very quickly. Very quickly. We'll go ahead and pin that, and then we'll continue on here. How does that sound? Perfect. Thank you. Thank you. Right. That's where it is. All right. I'm going to go ahead and get that enroll. You can do that. If you want the form so that you can see where you will be in 3 years, 5 years, not 30 or 50. Come on, not 30 or 50, but in 3 years, 5 years, maybe 10 years, 11 years, depends on your numbers. We'll go ahead and calculate that for you. You don't have to worry about that. Then you can think about something else. Okay. So let's go back to sharing our screen here. We wanted you to see the numbers that we see out of debt quickly. There we are. And your screen share is loading right now. Now let's go over here to our Money Max. All right, so we're going to upstart that loan. We're going to manually add the loan. What kind of loan is this? Okay, it's an upstart. Okay, upstart. We'll go ahead and put the name in there. And we'll just say Bank One. How about that, man? They all work together anyway, right? Then we have the current loan balance, 5424, right? We're going to put that in there. What's that current rate? Current rate, 26.99. Right. We're not afraid of the interest rates. It's very important. Okay. Not afraid of the interest rates at all. So let's see what her minimum monthly payment is. Right. 457.98. Okay, we'll do it at a remaining term of 60 months. 420. All right. We're putting our numbers in here right now. Okay, so that's Upstart. We went ahead and put that in there. Okay. Then we're going to go ahead and go with this line of credit. We do have a current loan balance of, now this is a very, very common mistake. Did you see a mistake that I saw? Okay. A lot of, let's say, people, and this may be a loan, the LOC. LOC may be the lender, but a lot of people make the mistake of going by what the bank says. Sometimes the bank will say HELOC, right? When really they mean HELO. And so that's very important that we make sure that they mean open-ended or closed-ended accounts, open-ended or closed-ended loans, open-ended or closed-ended. Okay. So we want to make that difference there, because lines of credit and loans are different. Yes, they are. Is one better than the other one? Very good question. Very good question. However, it would all depend. It would all depend on what your goals are. I think that's the best way to answer that. It would all depend on what your goals are. If your goal is to, let's say, rehab the house, right? Can you do that with the same money from a HELOC than a loan? Are you struggling with the mixture of debt as well? You're struggling with the mixture of debt because you know that that's what the banks love. The banks love a mixture of debt. They like to see lines of credit. They like to see loans. They like to see your credit card here and there. They like to see these installment loans here and there. So if you're in need of a mixture of credit, we'll look at that aspect as well. Does that make sense? Perfect. So we got to keep that in mind. Okay. We have to keep that in mind. And these are real numbers, folks. Of course, I've blackened it out, the information up above. We are currently helping this individual. We're doing it live. And if you need that form, it's going to be the bit.ly/velocity underscore analysis. Okay, we're almost done. Now we are doing the revolving credit, and we're going to be going on the revolving credit. Okay, look at the beautiful revolving credit that this person has. I mean, it's beautiful. We got $3,000. We got 4,400. We got 5,200. We got 4,350. We got $2,000. It's so beautiful. The mixture of numbers, thousands of dollars in lines of credit. This person is going to hammer their loans. I want you to see when I reveal to you the Money Max account and how long they're going to be out of that debt, how fast they're going to get out of the debt. It's going to be unbelievable. So let me go ahead and continue on here. Thank goodness that they got the credit cards. Thank goodness for that. Okay. Every one of them are CCs. Every one of them are CCs. Okay. Now you may have some people that frown upon the amount of credit cards that you have. Can I just be the first one to say, I'll submit this for your consideration. Please, please, there's no judgment here. I don't frown upon you. Okay. No one here at Velocity Consulting frowns upon you, because we know one thing for certain, that these are tools, and your spending lets me know at least one thing, that you are not afraid to deploy capital to the things that you think are important to you. So kudos to you. Does that make sense? We are not here to judge anyone. Okay. We ain't gonna hurt nobody. That's not the goal. We're gonna show you how to get up out of this. Even if you have 26.99% in interest rates, even if you have 23%, even if you have 30%, 40%, we're gonna show you how that when you are implementing the velocity banking method, none of that matters. None of it matters. Okay, we got 3 more. Yeah, none of it matters. 26.94. Wait a minute, CJ. How can you say that none of it matters? None of it matters. Why? Because you have a plan. You know how you're getting out of it. We got one credit card at 23%. We got another credit card at 25%. Okay. We got this person over here judging you, talking about why did you get into that, calling you stupid, different things like that. We don't do that over here. We don't believe in that. We believe every one of you are geniuses and fearless. Why? Because you're deploying the capital to the things that you think are important. So, why do I say that? Because you can transfer that energy, you can transfer that mentality. Now, when you're out of debt, you can transfer it into assets now. And you're not going to be afraid to get your first fix and flip. That's what I did. You're not going to be afraid to deploy your capital. Mm-mm. Okay. Now, let me show you something. Let me show you something right now. I will stop sharing this and I will start sharing the Money Max account. And I'll show you exactly what I'm talking about. This person is $11,823.20 in loans, and they're already going to pay that off in 0.4 years. That's less than 6 months, folks. That's less than 6 months. Do you see what I'm saying? That's less than 6 months. So the question then becomes, wait a minute, over 11,000? How is that even how is that even possible? It's possible when you have a plan. And we're not even done yet. Can I just be honest with you? We're not done putting in the numbers yet, but you're going to see what normally will take you 20, 30, 40 years on the bank's plan is taking this person less than 6 months. Now, I know, you know what? That is an outlandish thing to say. I know it is. It's an outlandish thing to say, CJ. I'm not taking you seriously. And that's okay. It's okay. It's all right. But I'm telling you, watch this next one, okay? Watch this next one. I'm going to put in, okay, so this one's a small one, 41.03. So this one doesn't count, folks. This one doesn't count, right? But she does have 5,200 on this one as the credit limit. Oh man, this person is going to get rid of their debt like really, really, really fast. Watch. But 125 is the ooh man, 125 on a 41 balance. It's the minimum payment, right? That's okay. No judgment at all. You know what that means? That's a cash flow sucker, boy. That is a cash flow sucking loan, let me tell you, or line of credit. Why? Because look at how much they borrowed, look how much they got to pay back. Okay. So let's go ahead and go to the next one. Okay, so this one's pretty substantial, 42.22. So let's go ahead and now all of these are lines of credit, all these are credit cards, but I want you to know what happens. Okay. We're almost done. We got like, I think like two more. Okay. Now, of course, you are gonna go ahead and put your bank there where it says lender. What I say, 42.22? Yep. 50. What's the credit limit on that one? 43.50. What this does is it actually subtracts the middleman. You don't have to have a middleman when you have a system like this. 155. You can simply put it in and say, you know what? You can put your statement date in, you can put your payment date in, and for more accurate response and more accurate transfers. Look, we're still not at 6 months paying it off. Over 16,000, we're still not at 6 months paying it off because the system has already showed you how to pay it off. Remember the action plan? We'll get to that right now. In just a minute, we're going to be getting to the action plan. We'll get to that action plan. And of course, if you want your own action plan, let me know. It's pinned right there. Just go ahead, enroll in the class. Boom. Go ahead and put that proposed plan out there for you and a whole lot more. Yes, and a whole lot more. Okay. You're going to be like, my goodness, I had no idea. So let's do one more. So this is the last one. There's not two more. This is the last one. So this is credit card 5. And this is actually how much the max in credit cards you're supposed to have. 5 credit cards, 3 to 5. Shout out to Garrett Gunderson. Thank you so much for that. You've done so much for me over the years, man. I really can't do you justice on here. 1752, 1752.18. And then we have 2000 is the credit limit. All right, let's do that. And then we're going to put it at 28%. That's right. I'm just going to put my money where the mouth is because I did say it doesn't matter what the interest rate is. So we'll just put that at a 28%. 56, you know what? 60. Perfect. Then, all right, this is the last one. Is it going to take it? Are they going to have enough to? Okay, all right. So we're still not at 6 months. And you saw me insert it. Okay, now, let's be real. How many people have this much in the bank account, right? Isn't it more like this? Hey, no judgment. Isn't it more like that? So let's go ahead and make sure that it reflects reality. That's okay. Hey, it's okay. Let's make sure it reflects reality. Let's save it. Let's put it down to 0. I tell you what, let's go ahead and put this one down to 0 as well. Okay, both of them at 0. And so you're going to see the number change, right? You sure will. Emergency fund. Now, what this system is doing is making sure you're having emergency funds. So I said, let's go ahead and put the emergency fund at 4,530. And so that's what it is for this one. Okay. So let's go ahead and see if we can click next and then click save there. We recommend that you review your statements. Thank you so much for that. But you're both at 0, right? Nothing in the checking, nothing in the savings. So the system is going to say, okay, now you have to have something in the savings or the checking. So we're going to be making sure that transfer is done. We have over $18,278. Okay. Over $18,000. And we need to see our action plan. Of course, we have the credit cards, right? Of course, we've got the loans. All right. Perfect. Now, this person is missing a vehicle probably because they think they can't afford it, right? They think because of that high interest rate, perhaps their credit isn't the best, isn't where they need it to be. They think because of that, they are disqualified. They do not qualify for a car or a truck or anything like that above maybe $3,000, right? But look at how much they make. Isn't it time for banks to start reevaluating when they come across a responsible person like this, right? And that has their income where they can see it, that has their expenses where the bank can see it, that has all of their accounts lined up. And oh, by the way, we also have an action plan that we can go by to get us out in 0.8 years. So you mean to tell me that when you walk up in a bank, and yes, you may not qualify for this, and yes, you may not qualify for that, but if you walk up in a bank with this and let them know, listen, I have a plan to get up out of all of this in 0.8 years with only this amount, right? Let's go back. With only this amount in the bank, this is how much I'm cash flowing each and every month, $1,544.02. You mean to tell me they'll just shoo you off like someone else, like a regular customer, like a normal customer? Shout out to the banks that do not follow the preordained debt motivated thinking of years gone by, but they look and they make a calculated risk upon individuals, but they win when they see the Money Max account. and what this individual is using. You cannot classify someone that has the Money Max account with someone that does not, right? Because the banks look at people. I'm talking about the leadership, not the tellers, but the banks basically look at people like slaves. Okay. But this is not how a slave operates. And they're going to know that. Go into there, letting them know, listen, I'm going to be saving $5,495. Yes, we do have loans here and there. Yes, we also have credit cards almost maxed out, but I have it right here. I'm still cash flowing $1,544. And oh, by the way, let me show you how. Let me give you a detailed plan on how I plan on getting out of all that debt within a year, in less than a year. Okay. And you see the transfers right there. Suggested strategic accumulation transfer. We see another suggested strategic accumulation transfer because you're telling the bank, listen, I'm also saving for the emergency fund, right? This one, that one. We're talking about things that have never been done before. You ever heard of Star Trek? Yeah, yeah. We're talking about boldly going where no one has gone before, showing the bank, this is how I'm going to pay it off, right? Showing the bank, yes, I know you may think that I can't do it, but let's go through a system. And oh, by the way, the same system that you have. Can I afford a car? Let's go by the numbers. Okay, you can do this. You can do this. Let's go ahead and do car loan one. Okay. And let's say bank one is letting us know, hey, um, they're seeing, right? They're seeing, man, can this person afford this? So 20,000, right? Let's just go up there. Let's say 12%. Okay. 84 payment amount. What is it? 700? Boom. All right. And that's usually what the payments are, 700 each month. It's like, oh, are you serious? And look, so I know it's gonna be like what? Maybe like six. Can we go like 600? Maybe? I know 700 just sounds wild, man, doesn't it? Man, you don't plan on getting that. You're gonna be paying them all kinds, but it is a 12%. Guys, let's just go with 700, okay? We didn't calculate this beforehand. I'm on a roll. Don't stop the roll. Here we go. Cinnamon roll. 84 months. Original balance 20,000. Okay. Now you can lessen that, okay, if you want to, of course. You come to the bank and let them know over $38,000 done in a year and a half. Is that powerful? Does this give rise to a new type of banking? If you seeing this as a banker, let's just put yourself in a banker's shoes. If you seeing this, because you already know where they work, right? You already, because they already filled out the application, they already filled out all the forms that they need to, and plus, let's say it's a credit union, right? So you know this person, you know this individual, all right. If you give them this, if you show them this, wouldn't this wouldn't this create a new type of banking, a new type of banker who is actually going to be going off of not just the credit score. Credit scores are important, right? But they're also going to be going off how you view cash flow as well. Can you put it within the Money Max account, and are the numbers going to work? Now, mind you, they know what you spend your money on because it's your bank. Okay. So it's not gonna like they're gonna be like, oh well, we just gotta take his word. No, man, don't take his word. Take his money. Right? Take the numbers. There you go. Don't take the word. Man, that should be a t-shirt, huh? Don't take their word, take their numbers. What's the spending habits of this guy? What's the spending habits of this girl? And by the way, how do they view money? Do they have some sort of cash flow management system that will keep them on track? And are they staying on track? And the bank will see it. What do you think with this new type of banking? Okay. What do you think the economy is going to look like when they see something like this? So let's go ahead. Absolutely. I gave someone an idea. You got to share this all over the place. Don't we need some new banking? One that's not necessarily just based off of debt, right? How about assets as well? So let's go to our new plan because the new plan has been enacted. All right. So we see that we added a truck. Let's say it's a truck, a Toyota Tundra. We added a truck there. It cost $20,000. Of course, it couldn't be a newer Toyota Tundra, right? But look, we already know what we're going to be doing with $1,462, putting in our savings. Perhaps it's for the emergency funds. Perhaps it's to deploy so that we can take down the principal of one of our loans. Let's go forward. Okay. Yes, we still have wining and dining money, food and dining. Okay. Let's keep going down. You see our strategic transfers, how that we're transferring from checking to savings, then from savings to checking. Okay, making sure we avoid those overdrafts, right? Making sure that we're paying the phone bill, right? Then we keep on going. We'll keep on going. All right. And then we'll keep going, keep going, keep going. Then we're paying the credit cards. You see that in May? Perfect, right? Yeah, yeah. Car loan one. Here we go. We're paying it all. May. All right. Beautiful, right? That LOC, we even included that. So when the bank sees this, what type of advantage would this type of bank have over the traditional bank? It would give way to a whole new economy. So that's velocity banking, giving way to a whole new economy because people don't think like this. Can you imagine a bank that thought like this though? What would a bank that thinks like this, what would they what would they do? What kind of capital would they be introduced to? What kind of opportunities would you have if there was a bank that thought like this? All right. Folks, if you need your own proposed plan, click that link. We're here for you and we will get it done. All right. As well as you see these numbers that you see right now, there will be your numbers. And let's go up and we'll show you the debt free date of this person. So the person that sent me the numbers today, a year and a half, and that's if you have add on a car loan of $20,000 at 12%. Okay, remember we had you at below 6 months paying off all, I believe it's 11,000 or $18,000. All right, so over $18,000 paid off in less than 6 months for you. So just let me know, okay? I know you're busy working, different things like that. You probably heard the kids in the background. We don't have that problem. We're just so thankful, right? Blessed. Um, we want you to know, man, we're here for you. We want you to experience freedom, financial freedom. And so we want you to contact us to make sure that, let's just say you have a proposed plan already. Let's go over the numbers. Let's see where we can help you at, maybe supplement something, and then, maybe scrap that plan, right? And then get with a better plan or just add and adjust and then send you on your way. Either way, we're here for you. Okay. Well, we thank you so much for tuning in. Play this video again and again and again, right? Like, share, comment, subscribe so that people all around the world can see this and create a new bank. I'm telling you, man, if a bank did more than just look at a credit score and look at where people are, if they took into account what those people have, like a cash flow management system like this, come on, it's game over. Lisbeth, if you're watching, and I know you're watching, Let's do it one more time. I have a solution for you. All right. She's over there in the Netherlands. Big shout out to her. Appreciate you guys. God bless, and you have a good one.